Should you elect an S Corp this tax season? Before you answer that, let me tell you something I see every single year. I've worked with clients who had 2, 3, sometimes even more S corporations, and some of those businesses barely had activity. They thought they were being tax smart. In reality, those S corps were costing them money, time, and unnecessary compliance stress. So if you are thinking about electing an S corp or you already have one, this episode is for you. Every tax season, people come to me already registered as S corporation, and most of the time that decision was not made because the numbers supported it. It came from TikTok or even from a tax preparer who never run an analysis, because filing forms is not the same thing as tax strategy. And I want to be clear, I am not against S corporation. I recommend them often when they actually make sense. The biggest misunderstanding is thinking an S corp is just a tax election. It is not. The moment you elect S corporation status, you are committing to an entirely different level of responsibility. You are now dealing with payroll taxes, reasonable salary rules, and separate business tax returns every single year. Those costs don't care if your business is slow, new, or barely profitable. I've reviewed situations where clients had multiple S corporations, each with limited activity. They were told more entities meant more saving or better protection. What it really meant was more payroll accounts, more tax filings, and higher compliance costs. And here's something important. Even if one of your business should be an S corp, that doesn't mean every business you own needs to be one. When we finally run the numbers, the tax saving they expected were not there. One of the most expensive decisions I see is people registering as an S corp from day one, before the business proves profitability, before there's enough income to support payroll, before anyone actually checks whether it makes sense. At that point, you are paying for structure without strategy. That is not planning. And this is where I need to say this plainly. I've seen people pushed into S corp elections by social media and by tax preparers who never performed an analysis. Electing an S corp without running the numbers is not tax strategy. What helps one business can quietly hurt another. Before I ever recommend an S corp, we look at the full picture. We review actual profit, reasonable salary, added payroll, and compliance costs, and the real tax difference, not assumption. We also consider your future goal and other tax strategies you should consider. If the numbers support it, we move forward confidently. If they do not, we wait. Sometimes waiting is the smartest tax decision you can make. Before you elect an S corp this tax season, ask yourself one question. Has anyone actually run the numbers for my business? My name is Noura al-Masri. I help thriving entrepreneurs stop overpaying in taxes. If this was helpful, make sure to subscribe and share this video with your friend who might benefit from it. And I'll see you next Monday with a new video to help you stop overpaying in taxes.